Hello and welcome. You are watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. And it's a Monday morning and the markets have kicked off the brand new week in the green. And Nifty is back again, knocking at the doors of the record high. The broader markets also are marching towards their respective all-time highs. And this is, by the way, despite a muted hangover from the global markets. Amit, isn't it?
Yes, and despite the inflation data that has come in, the U.S. markets have all been in the red as on Friday. So Dow Jones closed in the negative at 0.37, S&P closed in the negative at 0.48, Nasdaq closed in the negative at 0.82, all of them in the negative. Europe, however, closed in the positive marginally at 0.62% in the green. Chinese market, though upbeat, have been little down today. The Hang Seng is down 1.07% this morning. Nikkei is also down, is in the negative at 0.31%.
All right, and the Chinese stocks, as we know, are back in action. They are back from their holiday, a week-long holiday that is. And US markets, of course, they saw some profit taking on Friday's session. This was on the back of course, wholesale prices, wholesale inflation coming in hotter than expected. Remember last week, the consumer price index, the retail inflation was hotter than expected, and that's why we saw some bit of a correction in the markets in the US as well. But we saw the markets bounce back subsequently. But on Friday, the wholesale prices, they have come in hotter than expected, and this is key for us because it plays into the entire narrative of a rate cut from the Fed. The broader expectation was that the rate cuts will start coming in from the second half of late by 2024. The market is expecting the first rate cut to come in somewhere around the June in the June policy meet, but that could perhaps push the expectations of a rate cut further deeper into the financial year. But the Indian markets now, they are faring quite well, and even last week, when most of the markets opened in the negative on the back of a hotter than expected inflation print, retail inflation print, we saw very good recovery in the Indian markets. In fact, we were able to close in the green, and even today we are bucking that muted trend in the global markets. Nifty has opened above 22,100. We are in fact just touching distance away from record high. That sits at around 22,126. We are currently at 22,90, and that is as of 9:30 a.m. this morning. So just about 30-40 points shy of the record high. Sensex is up as well, up about 0.15%. The broader markets, they are leading the charge this morning, and mid-cap index is up about 0.6%, whereas the small-cap index, that is the strongest segment of the market, that is up about 0.7% as well. I think one of the things that will perhaps could throw a wrench in this bull run that we have been seeing in the last 3-4 sessions is the spike in volatility. Remember, we were back at near 15 levels on India VIX, but as of Monday morning, this morning, we are back knocking at 16 levels. But with that, let's also bring on board Akshay Bhagwat of JM Financial. Thank you for joining us here on News9. Akshay, always a pleasure speaking to you. And I wanted to talk to you about this bull versus bear case, because of course Nifty is on a 4-day winning run. It has been making higher highs, higher lows along the way, and we are back in the vicinity of record high levels. Now that's the bullish case, but on the other side, Nifty has already made a double top at record high levels. We have seen big intraday corrections from there on, and there is of course a possibility that a triple top could be formed. So far we have not been able to topple the record high. Even the global cues, they are not looking quite as supportive as they were just last week. Where do you stand in this argument, the bear case and the bull case?
Good morning, Suyash. So as far as Nifty goes, if you look at the scenarios now, a possible triple top, which you just spoke of, yes, we are almost at the resistance where we are trading today. So it's just a very crucial zone, an important resistance which the market deals with today. Whether it manages to break past this level or not is the question. Clear, but one thing is for sure that 21,125 is a massive resistance here. There have been 3-4 attempts made in the past and all have been unsuccessful. If you sum it up broadly, it's been more more of a neutral stance since 2024. It's been in a range. The momentum is off in the index, supported by some other sector-specific rotation, which you see. And if you see day trading, clearly the market breadth is somewhere off. There is some selling pressure, which is evident in majority of the counters. So looks like that the breakout won't happen today, at least going by the opening data and the price momentum on the screen. So yes, we are dealing with a resistance area. Patiently wait for the breakout if you were to take a buy trade, because again, if we fail to get past the resistance zone, then again be prepared for the lower end support base, which way goes all the way down till 21,600. So I would play a cautious approach here. Let the resistance break, and then only you go for a momentum buy trade in the Nifty index.
All right, and as we speak, Akshay, the markets have in fact turned negative. Nifty is currently down about marginally just 0.05%. We are still holding about the 22,000 mark. But moving on to Bank Nifty, you know, that had been a strongest segment of one of the strongest segments of the markets last week. The index on the whole surged by about 1.5%. We took out 46,000. A level which Bank Nifty had struggled with in the past, in the recent past or so. But now 46,500 is is a level where we are seeing some signs of exhaustion. On Friday, I remember we saw about a 300-point cut from the intraday high. Even this morning, the markets have reversed course around that 46,500 mark. Is that a key hurdle that we need to take out now?
Yeah, completely concur with the view which you mentioned. From a weekly perspective for the current week, 46,500, 46,600, that's almost where we registered our day high today, is an important resistance. Slight broader picture is that 47,000 for Bank Nifty to 45,000. Or 46,000, because that's where the rally kicked off. 46,000, 47,000, 1,000-point range is where you work for the February series. Broadly, Bank Nifty is in a range. It is just that the last couple of days rally has been too fast and too soon. Otherwise, if you the broader picture is still that it's in a range. There is no clear trend in place. So you buy at support, sell on resistance. That's the scenario which you should work with Bank Nifty. As I mentioned for Nifty, for the weekly traders, we are at a resistance zone in Bank Nifty. The area from 46,600 to 47,000. This is a gray area. You know, this is going to be a volatile. This is going to be a zone which is not in your comfort. So I would say play it very cautiously. Keep strict stop losses, especially if you're going long. For me, the comfort in Bank Nifty, I would draw comfort on the buy side if we sustain above 47,000. If it does not, then again you go all the way down till 46,000, where again from a day trading or short-term perspective, you again search for buy opportunities. So that's how the Bank Nifty is placed.
All right.
Good morning, Akshay. Now I'll drive your attention to Bajaj Auto. When they announced the results last month, around the 25th, their share prices jumped 4% to their 52-week high at that time, which was 7,499. As I look at the share today, it is trading at 8,515, close to its new 52-week high. So basically a rally. What do you make of Bajaj Auto? Their profits had gone up 37%, but is it time to cash out, or is this rally going to be a long and elongated one?
See, for portfolio holders, I believe, Amit, you can still continue to hold on. The rally is very strong. It is one of the strongest companies from the auto space, which you should own in your portfolio. So long-term investors really need not worry about even small profit booking if you do have in Bajaj Auto. But from a trading mentality, clearly it is a highly overbought zone. The way it is moving, it doesn't draw me comfort to take a fresh buy trade. A correction can always be on because the parameters are too much overstretched for comfort. So 8,200, 8,150 roughly is the area. If I get a dip, I would be more comfortable to take a buy trade. So from trading, it's a no. From investment, yes, hold on. It's at its all-time high. So, you know, it's about holding, investing. So not worry about targets. It continue to maintain a hold from a portfolio perspective. And for traders, wait for a dip till 8,150. That's the advice I would have for Bajaj Auto.
All right, that's the word on Bajaj Auto. But another stock we wanted to pick your brains on was Paytm, and a slew of positive news flows coming in for the fintech company. You know, it has partnered with Axis Bank for merchant payment settlements. This arrangement, by the way, will replace a nodal account which was earlier used with Paytm Payments Bank. RBI, by the way, has also extended the deadline to for the payments bank by 15 days now to March 15. And we also have a outperform call from Bernstein with a target price of 600. Akshay, what's your take? You know, a lot of positive news coming in over the weekend. Has the stock bottomed out?
Positive news over the weekend, completely I concur with the view. Axis Bank is partnering with them. The deadline has been extended by the RBI. So two positive news working out in a highly oversold scenario for the stock. But completely, it's more of a trader's zone. It's in the trader's playground, as I understand, where the stock trades in. A pullback till 400 cannot be ruled out. So 400 is the upside. So I would suggest have a trading mentality with strict stop losses, because the next time frame for Paytm is going to be highly volatile on news, on oversold parameters. You will always have buyers somewhere on the dips and sellers who will look for an exit as soon as it bounces near 400, 420 zones. Investors, I would say that it is not out of the woods. There is no still clarity over the broader picture of the stock, and technically also it is, although oversold, it is not showing any signs of bottoming out as of yet. So I would say investors stay out, look for exits on rise around 420. For traders, 400, 420 might be the slight bounce back scenario which you can work with Paytm.
Okay, Akshay, Paytm not yet bottoming out. What are your picks for the investors today?
Yes, so consumer durables and pharma, that's the sector I would look forward to, because we are dealing with almost a resistance zone. Defensives might get into the play here. So Tata Consumer is a buy trade for me for a target of 1187 with a stop loss of 1129. A consolidative chart structure setting up for breakout. I believe there is still momentum regain which is likely in Tata Consumer. So that's the reason I recommend a buy trade. And second is Lupin, although a bit off in opening trades, but pharma is the flavor for the short-term trades. It's slightly 1% down, but the broader chart structure is positive. I believe it will regain from the current level. So buy for target of 1652 with a stop loss of 1597.
All right, those are the top trading ideas for the short term from Akshay Bhagwat. Sir, thank you for joining us here on News9. Always a pleasure speaking to you.
Thank you.
But with that, let's take a short break. On the other side, we will be joined by Gaurang Shah of Geojit Financial Services.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that U.S. markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Welcome back. You're watching First Take here on News9, and our markets now, they are seeing some bit of a volatility set in the morning trade. Nifty, as we speak, has in fact turned negative. We are currently down about 0.06% at 22,026 levels, so still holding above the 22,000 mark, but very close to the day's low. And these numbers are as of 10 a.m. this morning. Sensex is also trading with a cut now of about 0.13%. The mid cap and the small cap indices, they are, although they are off the day's high, they are still trading in the green, up about 0.3%. Both indices, Nifty mid cap 100 is holding above 49,300 mark. The small cap index is also holding above 16,200, and volatility, India VIX, now that is back, knocking at 16 levels. Remember, in the last two sessions of last week, we saw a good bit of a dip in volatility. India VIX was back near 15 levels, but a 5% surge today, and we are back knocking at 16 levels, and that's for India VIX. But with that, let's also welcome Gaurang Shah of Geojit Financial Services. Sir, thank you for joining us here on News9. A lot of the big macro events, your monetary policy meet both in India and US, the budget, December quarter earnings, they are now behind us. What do you think, what will be the focus of the street in the next couple of weeks, sir?
Thank you, Suyash, and morning to all of you all, and thank you for having me on the show. So I think large triggers as far as domestic events are concerned are possibly now a past event. Our sense is that news flows from the global arena is something what will possibly drive the markets. Not that we are solely dependent on those, but I think the way we had a knee-jerk reaction last week on fallback of the higher than expected data in the US, we went below 21,600. I think it was last week on Wednesday, if I'm not mistaken.
Right.
And I think we also discussed about it in terms of range-bound market, 21,600 to 22,100. And since we opened up at the high end of the band this morning, we are seeing a little bit of consolidation of profit booking. So I think we may possibly spend some time consolidating. I don't see any large move coming. There are certain pockets in the market which may possibly, because of being a little bit expensive or valuation being high, you might see a certain amount of profit booking over there. But there again, I think we'll possibly have to wait for a while for certain upgrades also to come through post the third quarter earnings. I think since we are trading at the high end of the range, there should be a little bit of consolidation and profit booking. And in terms of news flow or events, I think more of global play rather than a local play now.
And with regards to the global cues, I wanted to pick your brains on this inflation data that came in hotter than expected. Of course, last week we had the CPI numbers from US. Now we have the wholesale price numbers. Again, they are the expectation. The print is higher than expected. How do you think that fits into the rate cut narrative, and what does it mean for us, sir?
Well, Suresh, I think the Fed chair has never said that they are going to cut the rates in a particular time frame. I think it are the market participants who had more of an expectation. My sense is that unless then Fed or any central bank in the world will not react on each and every, monthly or quarterly inflation or WPI or CPI data and then decide. They have to see a consistent period of couple of months of performance as far as the inflation data is concerned, and then of course depending upon the wisdom they react to it, and then they do act accordingly, whether it is a rate cut or a pause or a rate hike. So I don't think 1 month or 1 quarter data will give you that kind of comfort that you go ahead and move on the interest rates. So we'll have to wait for a while, Suyash, and I think it was absolutely not a wise thing to expect rate cuts to come through in the first 3 months of calendar year 2024, that is Jan, Feb, March, as far as US central bank is concerned. I think they'll take a while still.
Right.
Good morning, Gaurang. Now, the Defence Acquisition Council has cleared as much as 84,560 crores towards acquisition proposals to boost capability of the armed forces and the Indian Coast Guard. And this includes new generation anti-tank missiles, air defense tactical control radar systems, multi-mission maritime aircrafts, amongst others. Now, I was looking at some stocks specific that should be affected. HAL last 5 days has been up 9.77%. Bharat Dynamics, which is into the manufacture of guided missiles and allied equipment for the Indian Armed Forces, has been up 10.42%. Paras Defence and Space Tech, which is into the development of space applications for defence and solutions for defence purposes, is up 5.19%. Idea Forge, which is into UAVs, unmanned aerial vehicles for defence purposes, is up 6.92%. And Taneja Aerospace is up as much as almost 17%. This provides repairs and maintenance to defense helicopters and aircrafts. What do you, Bharat Forge and of course Midhani is still down. Do you see a good uptick in the times to come towards defense stocks?
So I have, thank you and morning to you also. So we have always mentioned that defense, and let me give you two more sectors over here for the benefit of your viewers and investors. Defense, railways, and power. Power includes power generation, power transmission and distribution, and power equipment. Our sense at Geojit is that these three sectors are possibly in a multi-year growth story on fallback of whatever initiatives the government has taken. Now, whether it is to do with defense, because defense is, mind you, it's a prolonged kind of investment, and it takes time for order books to get executed because of the technicality and the complexity of it being a very high-end, precise product. So that takes a while. But as and when they get a prototype done, they get a mass approval of mass production, the cash registers will start ringing in. One more name that I would want to mention amongst these names that you mentioned, I'll keep my commentary limited to HAL, Bharat Dynamics, because that's where we had a coverage also in terms of IPO subscription. Other two names that I feel should also be a part of this list is BEL and BHEL. They are also, of course, government-owned companies, and they have done pretty well in the last couple of months in terms of order book execution and their share price move. Along with this, power sector, whether it is power generation, power transmission, or power distribution or power equipment manufacturing companies, and so is railways, because these are not just 6 months, 1 year kind of companies that they'll get order from. And for defense, domestic is a big market, and equal big market is the global market in terms of supplies. So these stocks are going to be in the spotlight for all the good reasons for a pretty long period of time.
Gaurang, specific to HAL and even BHEL, there has been talk that over the last 1 year, these stocks have rallied a little too much, and there will be time for correction. Do you still say that these stocks is still good to buy at this time, or you will see some moderation or some plateauing?
Well, I have never been a great guru in terms of timing the market or finding levels, to be very honest. I believe that if you are looking at investing in a company, don't waste your time looking at those levels, because you will end up not buying or investing the money. So, whether this is the right level or right time, rather going into that debate, I will possibly take the plunge, at least go and invest maybe 25-30% at current levels. And like I mentioned when I was speaking with Suez, that there are certain pockets which are looking expensive. Defense may be one of them. I'm not saying that they are cheap. And last year also, you remember, I think it was in the second half, early second half, a lot of mutual funds unloaded defense stocks because they thought that they have run up and now the valuation looks to be limited on the upside. And from that time till this time, all these stocks have rallied at least 15 to 20%, whether it is HAL, whether it is BDL, whether it is Mazgaon, whether it is Cochin Shipyard, or whether it is any other stock. So corrections do come in terms of profit booking, in terms of valuation. So instead of waiting for that right time and right price, put some now. You get a correction, you add to it.
All right, and Gaurang, before we let you go, there are reports that SEBI is asking IPO-bound companies to remove selling shareholders, including your private equity and venture capital firms, from the decision-making process of the pricing of the IPO. And there are also reports, multiple reports, that SEBI is looking to introduce measures to tackle the high valuations in IPO for some time now. In your mind, what can the regulator do to ensure that the derived valuation are in the best interest of both the sellers and the buying shareholders?
So the promoter would want to take to the highest level, and an investor like you and me would want to pull it down to the lowest level. It's very difficult to strike a balance, fine balance at a particular point wherein there is equilibrium. But I think the regulator, SEBI, has been acting on and off as and when the need arises in terms of, valuation, in terms of interest of investors getting protected. And at the same time, no undue advantage goes to the private players or the promoters. So, I guess that they should bring in transparency. How, when, in what form, I think we'll have to just wait and watch, because I possibly cannot look into what SEBI is planning to do. But I'm sure whatever SEBI does will be in the interest of all the participants.
All right, that's Mr. Gaurang Shah for you, sir. Always a pleasure speaking to you. Thank you for joining us here on News9. But before we wrap things up, let's look at how the markets are doing, and we are seeing some bit of a bottom fishing taking place, at least in context of today's session. Nifty has bounced back from the low. We have defended 22,000, or at least we are defending it so far in the session, and currently as of 10:10 a.m. Nifty has taken a bullish pivot. It's back in the green, up 0.08% at around 22,060 mark. Sensex is although trading with a cut of about 0.1%. The broader markets now, they are also seeing some bit of a buying interest from their respective days low, and they, by the way, had not turned negative, unlike the headliners. Both mid cap and the small cap indices are up somewhere about 0.5% this morning. India VIX now, that remains elevated. It's up about 0.4% or so, and knocking once again at 16 levels. But before we wrap things up, we are counting down to the big event that News9 is organizing this coming weekend. The News9 Global Summit is about the new India that is being recognized as a rising economic power and a major global player. The summit is on the theme how India is poised for the next big leap. The What India Thinks Today Summit is being organized by the TV9 Group, and you must not miss this edition of the summit, all the more because the keynote address is by PM Narendra Modi. What India Thinks Today, remember, summit is on February 25th, 26th and February 27th.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.